The silver market is exploding with some of the biggest reactions we've seen all year. Analysts, traders, and even major banks are posting dramatic updates about supply stress and unusual futures activity. Let's start with what Wall Street Mav shared. Silver prices hit another all-time high tonight, trading at $63 per ounce for the first time ever. That line sets the tone. The market really is in uncharted territory right now, and it shows how quickly sentiment has shifted in just a few days. Right after that, Bob the billionaire also reported, silver passed $63 this evening on COMEX. Two separate confirmations, both pointing to the same thing, momentum hitting fresh highs with no hesitation. Then we have a striking post from Mike Maloney. He wrote, U.S. Federal Reserve note falls to 1/60th ounce silver. Whenever Maloney frames things in terms of purchasing power, it usually sparks a lot of discussion about monetary cycles and long-term value trends, especially during periods of volatility. Now, let's jump to Eric Yoon, who shared a full synopsis that's been making the rounds. He wrote, J.P. Morgan is making a historic silver bet. The bank now holds over 750 million ounces of physical silver, adding 21 million ounces in 6 weeks. It exited 200 million ounce paper shorts, leaving 0 short contracts for the first time. Physical supply is tightening as the U.S. Mint reports coin shortages. COMEX open interest is 244% of registered silver, lease rates near 30%, and 169 million ounces moved to non-deliverable vaults. That's a big one. Lots of data points there. Whether people agree or disagree, this kind of detail fuels the conversation around supply stress and institutional positioning. Next, Just Dario added something that's been raising eyebrows. Silver is now $0.28 away from backwardation on a future contract over 3 months away. This isn't a sign of a deep commodity market, but sign of a market about to be under a massive stress. Backwardation that close is rare in a calm market, so naturally traders took notice. And then Dario followed up again with, silver is slicing through Fibonacci levels a bit too fast, which makes me wonder whether the physical shortage is worse than what we already estimated. That comment blends technical analysis with fundamentals, a combination you hear more when volatility spikes. Gold Silver HQ added an interesting historical comparison. In the last bull market in 2011, gold went to $190 and silver to $50. The dollar index, DXY, was as low as 72. It's 99 today. Imagine gold and silver prices once the dollar index crashes to similar levels as in 2011. A lot of analysts are watching the DXY closely right now, so that statement is definitely fueling further debate.
Then the happy Hawaiian jumped in with one of the boldest sounding lines of the day. It's crazy to say out loud, but we're now closer to $100 silver than $20 silver. That's the kind of comment that captures raw sentiment, not a prediction, but a reflection of how fast the market has moved. A bit later, Just Dario also noted, silver London trading hours are about to begin, and this is where we currently are. Short, simple, but important, because London often sets the tone for the next phase of price action. Hansa Cerny added a macro angle. Cooling labor market and elevated inflation is just the polite way of saying real rates are heading negative again. That's the environment where silver doesn't rise, it escapes. You must act quite fast because silver usually reacts before the system admits the problem. Strong wording there. Again, sentiment, not advice, but the kind of macro context people reference when markets start shifting quickly.
We also got a strong reaction from Peter Schiff, who posted a detailed comparison that caught a lot of attention. He wrote, the silver train can't be stopped. It hit a new record high overnight of $62.89 and is now trading just under $62.40. From the date of this Valentine's Day post, silver is up 83%, while Bitcoin is down 10%. In terms of silver, Bitcoin has lost over half of its purchasing power. Peter Schiff has always focused heavily on long-term purchasing power and monetary comparisons, so statements like this fit right into his usual framework. His post isn't just about the move in silver, it's highlighting how different assets perform relative to each other over time, which always sparks debates in the comment sections.
Bob the Balloonier gave his daily alert, saying, COMEX silver daily alert vaults equal quiet again yesterday. Futures, however, equal loud. Longs piled on 16.1 million ounces for March. Brand new contracts, not December rollovers. Stackers watching. Silver squeeze pressure rising. No wonder price 5% in one day. The contrast between vault activity and futures activity is what stood out most in that update.
Then, Gold Silver HQ returned with another line, breaking, silver is now 10.8x away from M2 inflation-adjusted all-time high. That's a big macro comparison. Again, not advice, just a historical framing. Finally, the Happy Hawaiian posted again and wrapped things up with this thought. I honestly think it's just rising too fast for miners. No one thinks the price will stick. The march from 30 to 50 took 6 months and was much more steady as she goes. Miners ate that up. This is just wild. This captures how even longtime silver watchers are reacting to the speed of the move rather than the level. Let's add the latest updates coming in from the community. First, we have a short but attention-grabbing line from Gold Telegraph, who wrote, hard assets, things are getting hot again. Silver, $62.50. Even though it's brief, it captures the mood perfectly, a sense of momentum, intensity, and a market that keeps drawing more eyes every single day. Next, Hugo shared an important update from China's side of the market. He reported, China's silver stockpile continues to increase, stockpiling week 3. Shanghai's silver vaults have surged by 50%, adding 261 tons to reach a total of 781 tons, the highest level recorded in 7 weeks, plus 93 tons WTD. That's a significant shift. Anytime you see multi-week accumulation like this, especially from a major global market, people naturally pay attention. It adds another layer to the discussion around physical supply and international demand. So when you put all of these perspectives together, from traders watching futures activity to analysts tracking supply stress to commentators focusing on the macro backdrop, it's clear the silver market is going through one of its most eventful and closely watched moments in years. Everyone is looking at the same situation, but each from a completely different angle, which is what makes this moment so important to break down in detail. Disclaimer: this video is for educational and informational purposes only. It is not financial advice, and nothing discussed here should be interpreted as a recommendation to buy, sell, or trade any asset. Always do your own research and consult with a licensed professional if you need financial guidance.